Hello and welcome to the Ditto educational series that will provide you with the skills you need to become a Forex trader. Today we will be discussing the Speculative Sentiment Index and its relevance within the Forex market. Over time, as we learn to understand and implement indicators into our analysis, you will have noticed some similarities between them. Mostly all indicators are based on historical data, and this categorizes them as lagging indicators. This means that the information we receive is not in real time and therefore delayed. Past prices do not perfectly reflect future price movements, and therein lies a serious flaw within our lagging indicators. In order to gain a more predictive outlook, we may look to our leading indicators. The Speculative Sentiment Index is one of the few, and let's now take a closer look into what it is and how it works. What is SSI? The Speculative Sentiment Index, or SSI, is the accumulated data from real-time traders with positions held in the market. The data is collected and shared by individual brokers as there is no central exchange, so when sourcing the data you may want to do so through multiple sources. The positioning statement is a measure of the number of traders holding long positions in a currency pair versus the number of traders holding short positions in the same pair. If it is your first time hearing about this, that should excite you. Updates are issued periodically, sometimes as quickly as 20 minutes, and they provide us with a number of statistics which include the positioning, our ration of long to short, open interest, and the daily change in long and short positions. Next, we look at how to use SSI positioning. The positioning statement of the Speculative Sentiment Index is one of the more utilized aspects of the report. As we discussed, this is where traders can observe the number of traders long in a pair versus the number of traders short in a pair. As we can see here, this pair is showing a current reading of minus 2.81. So for every one trader that is holding a long position in this pair, there are 2.81 traders that are holding a short position. Any reading that is a minus figure indicates a net short position in the pair, while readings that are above zero indicate that traders are net long in the pair. SSI is a leading indicator that is referred to as contrarian. The reason for this is that you are using it to intentionally go against the majority of retail traders' orders. If we observe a net long position in the USD CAD, this can be perceived as a sign that taking a short position may be optimal. The reason for this is not because the 4.7 traders that are long in the pair for every one short are wrong, but because at some point the 4.7 traders that are long in USD CAD will need to close their positions, or in other words, they will need to sell. The traders that are short in the pair will need to do the same, and to close their short positions they will need to buy. This means that at some point in the future we can expect 4.7 units of supply entering the market, for which there may only be 1 unit of demand from short positions buying to close. What this means is that there could potentially be greater selling pressure than buying pressure, and we may look to take advantage of this pressure by opening short positions within the relevant pair. Applying the Speculative Sentiment Index to our Forex strategy can be a powerful strategy enhancer when done right. Even though it is one of very few leading indicators that we have to hand, it's very accurate when done well, but that doesn't mean it's always correct. For those that wish to incorporate SSI in their trading, we may first want to locate strong trends, and then use SSI as an indicator to filter out our stronger setups. When we looked at the US dollar Canadian dollar example earlier, SSI was at 4.7, which could be a bearish signal considering that more selling pressure may be in the future of the pair than available buying pressure. If we observe readings such as the 4.7 on the USD CAD, while the pair is in a long-term downtrend, we can interpret this to be seen as an opportunity to short the market. We can look to execute the short positions in a multitude of ways when looking for confirmation. Usually this is based on our preferred technical analysis. Some traders may prefer to enter using methods such as volume spread analysis, or possibly by waiting for price to move up on an intraday resistance level in order to trade the rebound in anticipation of the short. In terms of looking for opportunities with imbalance in the indicator, the general rule for Speculative Sentiment Index is to observe figures greater than +2 or less than -2, in which the trend is also running in agreement of the contrarian element of the indicator. In other words, we are shorting the market in a downtrend when sentiment is for the buy. In summary, the Speculative Sentiment Indicator is a leading contrarian indicator. This means it's more of a predictive indicator than its lagging counterparts, and you are looking to trade against the majority. Remember that 95% of traders lose money, and this method proves that exactly. SSI can show us accumulated pressure in terms of supply and demand, and we should look to trade the anticipated pressure. We need to use technical indicators in collusion with SSI to enter the market at the right time, and trading with a strong trend puts us at a higher probability of success. Now please take some time to think about the concepts surrounding SSI we have discussed today. Sit back and contemplate what you have learned, and remember, contemplation is the key to learning.
Thank you for watching the video. If you enjoyed our educational sessions, then please like and subscribe.